And historically, when we've had major policy shifts in China, the recoveries have been very V-shaped. I was similarly bullish to now in early 2009, and that caught a lot of global investors out, just how much the Chinese economy led the global economy in 2009 once the policy dials shifted. And the policy dials have shifted dramatically, not just in relation to COVID, but the property sector. And I would also say geopolitically, in terms of dialing down the tensions with the US and others. So everything is to play for in this V-shaped recovery. We'll obviously want to check in as we go along to make sure that we're right about that. But at the moment, we have this improved earnings story that I just mentioned, but also an improvement in the discount rate, because a lot of the geopolitical and policy risks that were in the valuation last year are also being priced out. And again, that's why the market is so exceptionally strong.
So in which quarter do we see that coming through? A V-shaped recovery in earnings, aside of the macro environment, the top-line GDP?
We think that because it'll be this quarter that the economy will start to strengthen, and then into the second quarter, and in fact throughout the year, as in 2009, you should see it in upward estimates for revisions really going forward from here, and they should be strong through the whole year. Of course, in 2009, the economic recovery was so strong that you eventually ended up in an inflationary environment in 2010. And I can well recall then having to recommend taking profits in China when inflation actually surged. So strong was the recovery. But we're a long way away from that now. And of course, China's recovery from a very subdued economic situation and very low valuations is very different from the situation in the US, which has that inflationary problem and had very high valuations. Yeah. So what we're actually seeing is substantial flows coming now out of the US into other geographies, but obviously particularly China, Korea and Taiwan, which are the other two markets we're bullish on.
Absolutely, and we'll come to that in a bit. I just want to talk about, obviously, the internet companies, right? You're talking about buying the large cap names, and that's been the discussion point all this morning, with obviously the government taking golden shares. Now Ryan Cohen saying, step up on buybacks. Seems like a bit of a conflict happening behind the scenes, because you have a lot of push and pulls as far as Alibaba and other big tech stories go in China.
Yeah, so we've added Alibaba back into our focus list recently. When we actually look at the overall flows towards China, of course, they're big index constituents. So to the extent that people asset allocate to the index, they do well. But there's also a micro story here. They're quite leveraged to consumer recovery, but they're also, in terms of managing their businesses, been adjusting headcount, and they've been focusing, and they've actually now got through what we call the regulatory reset. They've reset their relationships with regulators. And so that all bodes well for a cyclical recovery in ROE. So for Alibaba in particular, ROE can probably go from around 6% now to double digits plus over the next 12 to 18 months.